We detect massive Bitcoin withdrawals from centralized exchanges, pushing Bitcoin upwards. Retail investors' exposure to the Ethereum market increases by 25% amid the possible approval of an Ethereum spot ETF, and Kraken confirms that it will maintain support for USDT for European users. Now you are looking at a Coinglass chart where the yellow line represents the Bitcoin chart and where the green line represents our balance. Specifically on the Binance and OKEx exchanges, two exchanges that strongly represent a large part of the transactional cryptocurrency market liquidity. And we observe how between May 14th and 15th, investors decided to withdraw Bitcoin from these exchanges. And they did this presumably to move them to a cold wallet. Since the investors who decided to do this, I think you will agree with me that retail investors were not the ones withdrawing this Bitcoin from the exchanges. And that would imply that there was a macro organization among retail investors to withdraw everything at the same time. I think you will agree with me that this is zero realistic. In other words, the large institutions that move a significant flow of capital in crypto decided to withdraw Bitcoin from centralized exchanges between May 14th and 15th. That's why, during that same period, we see Bitcoin appreciating in the short term. Basically, if we have large institutions withdrawing Bitcoin liquidity from exchanges, they do so because they are not interested in selling it in the immediate short term. Therefore, they are expecting its valuation to be positive in the following days. And later, we will cross-check this relevant information with the Bitcoin chart, but not before talking about how the open interest in Ethereum futures shot up by 25% in just one day. And if you are wondering, what the heck does open interest measure and why should I care? Look, open interest reflects the exposure of open positions in the market at a point in time. In other words, if we see that open interest grows by 25% overnight, what it tells us is that investors have increased their activity by 25%, whether to buy or sell. But clearly, this optimism reflected in open interest is completely positive. You just have to look at the Ethereum chart to see how its price has appreciated in an extreme way. In other words, all this investor interest in buying or selling Ethereum makes it quite clear that they are really buying. In other words, we have evidence that we have an anomalous long exposure at this exact moment in time in Ethereum. This means we have a significant number of traders, of volume, and very serious liquidity in the market still pending closure. And this is starting to give us a lot of clues. You will understand it better when we cross-check this information with the advanced analysis of Ethereum. But the reason for the growing interest in investing in Ethereum lies in the fact that VanEck has advanced its application with the SEC for the approval of its Ethereum spot ETF in the United States. And the US Securities and Exchange Commission contacted several exchanges like Nasdaq and the New York Stock Exchange to update the applications for the Ethereum spot ETF. These updates indicate progress towards a possible regulatory approval. It is worth noting that the SEC must decide on VanEck's application for an Ether spot ETF tomorrow, May 23rd. And now, when we look at the charts, you will see how everything is about to collide. Because if approved, other applications from companies like ARK, 21 Shares, BlackRock, and Fidelity could follow the same path. This represents a favorable stance by the SEC towards cryptocurrency ETFs, as we saw earlier this year when Gary Gensler greenlit the Bitcoin spot ETF. It would be great news if the SEC approved this Ethereum spot ETF, whose outcome we will know tomorrow, May 23rd, because it implies that, just like with Bitcoin, large capital and major investment funds will have facilitated access to invest in assets like cryptocurrencies, which under other circumstances, probably due to lack of knowledge and risk aversion, they wouldn't touch with a 10-foot pole. And if you are wondering if this is positive for the crypto ecosystem, I will tell you that of course it is. On one hand, if there is interest, which there is, it will provoke an injection of capital into the crypto ecosystem even greater than we know now, in addition to providing an increase in global confidence that in the long term can benefit the valuations of cryptocurrencies. And speaking of Ethereum, many will be surprised to learn that it might not be the fastest network compared to its competitors, as a study by CoinGecko highlights that Solana is the fastest blockchain with 1504 transactions per second, surpassing Ethereum by 46 times and Polygon by by more than 5 times. Despite its speed, Solana faces reliability challenges, such as a significant outage in February 2024 and a recent attack on its DeFi protocol. And here you are seeing the Solana chart on its 4-hour time frame. And I think it is quite evident the positive sentiment that investors have towards this altcoin, as its fundamentals, basically what Solana is dedicated to, are proving to be highly efficient, and the market rewards this. And finally, the moment has arrived when Kraken has spoken regarding the uncertainty about whether their platform, one of the leading cryptocurrency exchanges, would delist USD from their exchange. Kraken has announced that it will maintain support for Tether stablecoin USD in the European Union, thus dispelling previous rumors about its possible delisting due to the new markets in crypto assets, MiCA regulation that will come into effect in July. Mark Greenberg, Kraken's global head of growth and asset management, highlighted the importance of USD for European customers and assured that they will comply with all legal requirements to continue offering this stablecoin under the new regulatory regime. If you read the press release carefully, you'll notice that what Greenberg is saying is that, for now, they will not delist UST. In the end, their legal team must have concluded that for the moment, they can continue operating as they have been. However, one thing is clear. They haven't been 100% definitive. They have left a part of the window open to the possibility that we might talk about something different in the future. But clearly, we shouldn't get carried away by the FUD. And as long as nothing contrary is stated, we should think positively. We are going to do something very interesting, which is to cross-check these important events that we are going to experience in the market, where tomorrow we will have the SEC's decision on whether they will approve the Ethereum spot ETF. Because, as I tell you, analyzing the crypto ecosystem, we realize that we are in critical contexts, and frankly, analyzing the different cryptocurrencies in the crypto market, I'm not lying when I say that they are an open book, and we are waiting for the catalyst, which will be the Ethereum news. And now I share our analysis with you, but first, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. I will give you a very brief summary of our updated analysis, which we will delve into in depth and detail in upcoming videos, but I find it crucial to share our updated vision. Here you are seeing the Bitcoin chart in its 4-hour time frame. We are going to assess that concerning this bullish impulse, we have experienced a corrective pattern, labeled as complex, and we have generated a black swan in the break of the corrective pattern guideline. On the other hand, we cannot lose sight of this bearish impulse where we see a W. Here we have a weak Y, and all of this is a Z in Bitcoin. And if you ask where the guideline passes through, I will tell you that it is a hidden guideline. They are often hidden, but they are there. In other words, in Bitcoin, we are experiencing a Z. And do you know what that means? A Z in basic theory tells you that you can keep going up as much as you want. It is very difficult to know how long it will continue to rise, but its predominant trend, just look at it, is strongly bullish. So, the Z can rise as much as it wants until it eventually collapses and tends to seek the guideline where it originated. In other words, this hidden guideline, to make it easier to understand, since I'm simplifying an advanced technical analysis in the simplest way I can think of, this Z can rise as much as it wants, but it will have a bias that we'll study on how it will eventually break this Z. In other words, on the chart, we should remain positive about the Z until proven otherwise, and we will clearly see this in other charts like Ethereum. This rise is a macro Z in itself, already analyzed in previous videos, and here we have identified its Z guideline. In the end, all of this is a correction. It's all part of the process. At the same time, remember the market is fractal. Here we have a micro impulse. Here is its W, its weak E, and its aggressive Z, which has created what is known as a black swan, encouraging us to be very positive about the ecosystem. But beware, we are dealing with a Z, and as I said, we can't go into too much detail or this video would be too long. But here, you see Solana's chart. This macro rise is a Zaz in itself. This is an impulse. This is its corrective pattern ending in a Z impact relevant structures, which we've identified in a POC. The point of control, where most transactions occur during this distribution process, where the institution goes short. That's why we closely monitor the area where we are in Solana, and the same applies to Cardano. They generate a black swan impulse, W weak Y, and all this is a Z that impacts a... Now, going into a bit more detail with Bitcoin, as mentioned. As long as we stay within this wedge, let's remain positive. If the price can hold the level of $68,845, this blue line, which we've derived from an order flow chart, if it can hold it, maybe it will test the origin of the breakout. This would imply that the Z can continue, just as it can continue from within, as you have seen. The fact that Bitcoin falls a bit, whether in this volume area or the origin of the breakout, is not the end of the world. It's a different story if these levels get breached. The scenario would change a lot, and we would consider all of this a trap. You will see this clearly by looking at other assets. Here we are going to look at Ethereum. Let's lower the time frame to 1 hour, and here we see a major impulse. We see how many investors are long exposed. Presumably, we need to see how the price has risen, how in one day the level of open interest increased by 25%, indicating that many traders have not yet closed their positions. Regarding the impulse I'm paying attention to, I notice how the price continues to rise at an increasingly slower pace. This is making me a bit wary, but I remember that we are in a Z, and the Z can continue to rise as much as it wants. We are not trying to turn the market around. We will only react in a very anticipatory manner if it shows signs of wanting to do so. What does that mean? We will remain positive on the Z while, in this Ethereum chart, as long as this high transaction volume cluster is defended. If we see that the price, after working through this rise, ends up breaking down, one might think it's the end of the world. Right now, they are indeed attacking it hard in real time as I record this video. But what I want to say is, the price can do whatever it wants. As long as this zone is not threatened and it holds, it will generate unprecedented bullish strength. In other words, despite seeing this breakout, which I was already considering as possible. That's why I'm watching it. That's why I have this line, this key control point level. If we see this prosper, as long as the Ethereum level of $3,590 is not surpassed and is maintained, we will likely see a significant price explosion. In other words, I'm giving you a map to follow the price in an anticipatory manner without trying to predict the future. With Solana, we see the following. If we are in Solana's Z, in that wedge, where the wedge breakout, I didn't believe it all. Nobody believed that wedge breakout. Hence, after that deceptive drop that no one believed, the price rose as it did. Here we are seeing the wedge breakout, seeking the Z guideline, which is right here, and here they are doing some work. If we see a breakout, we will be looking for a structure similar to this one, a somewhat cautious structure, since the price can still continue to drop as much as it wants. But as long as we do not break this structure, we will not find an extreme bearish move. Hence, we take this breakout with caution. We need to see how it develops. If it wants to, it can turn around and everything can continue. Don't be swayed by the FUD. Just like with DOT, what we are seeing is that after this black swan event, we have identified a creek over which we think there's a possibility that all of this might be a trap or not. And in the case that it is a trap, the movement has caught us live, but we are setting this area of Polkadot and this level as the limit. Here, I'm showing you the advanced order flow chart, and here you can see the rise of Polkadot. This is the recent channel that they are now attacking to the downside, as you can see. And if we look here to the left, look at what we find here. These buyers who in the future will want to defend their position just as they are doing right now. This is our rectangle that you saw on the other chart, and these sellers leave us a line as a precaution. What we do is analyze the volume, and in this video, I won't go into more detail. We'll do that in other videos, of course, and that's fine. As long as Polkadot does not break these levels, it can go down as it has already done. In fact, I was speculating that after this impulse and this timid rise, which was also hard for me to believe, we were easily going to break that structure. That's why I was looking at how far they wanted to take it, or how far it could react, or what its boundary might be. These are the levels I'm showing you on the screen right now. So, as long as we do not break these, we could see strong explosions in the ecosystem. Remember, as a concept, we are in a Z that will continue to rise, and we do not know when it will stop. The day we see these key structures of these ZS break, and we declare the explosive rise over, we will let you know and tell you that we are now in the bearish phase. We are in dangerous times, and coincidentally, these dangerous times coincide with the catalyst we will experience tomorrow regarding the approval or rejection of the Ethereum spot ETF. If you'd like to be part of the live sessions where we analyze how to take a long opportunity here on the TIUSD chart, we share this in a Crypto Insight live session. Finding a control point where if they really want to blow this up, they won't drop us below that point. That's it. We need to follow up on this. We need to follow up, so we'll see if TIA defends the area or if they give us a scare. A key area to look for a long in the market, in this case with TIA, and we'll see if they want to break the creek or what they want to do. Leave me your opinion in the comments. And if you like this video, give it a like, subscribe to the channel, and click the bell so YouTube notifies you of future posts. Good luck with your trading and see you next time.